Welcome back. You're watching Indian Open with us on Bloomberg Quint. Let's tell you what the Asian markets are doing right now. Well, it seems like a mixed start for the Asian market this Friday, though some bit of recovery has been seen for Nikkei, which was down over 200 points in the previous session. That's seen an uptick of nearly 90 points. Remember, the monetary policy comes out today from Japan, so watch out for that. Shanghai is down by 10 points, and SGX Nifty right now indicating a start below the 10,800. Remember, the markets were also weak in yesterday's session. Let's check with Agam Vakil then what sort of cues we're getting from the derivatives market. Hi Agam, good morning.
Good morning, Navneet. Well, again, when you consider the way futures and options space has panned out, let's start off with the futures. On the Nifty, at least, you're looking at some amount of unwinding, considering 3% decline in open interest, even as the index also declines by as much as 0.5%. So longs unwinding coming through, and it's coming down to the Nifty bank futures. It is the same, largely, with the index coming down by as much as 0.3%, and some unwinding coming along as far as the OI goes too. The wicks, of course, well, we have seen that move to a certain extent, but largely within the range. In terms of changes in open interest, as you can see here, we're starting to see a little more writing now when it comes to the 10,800, 900, and the 11,000 calls. And this is curious because until yesterday, we had that writing coming through at the higher levels. We also seen a lot of unwinding inputs, considering yesterday's day of trade was and did see some weakness. That aside, moving across in terms of the way we've seen maximum open interest pan out, it continues to be at around the 11,000 call, but on the lower end, it's starting to shift from around 10,400, 600, and now it is at around 10,700. This gives you an indication, or at least in the near term, it's going to be a 300-point range. In fact, a lot are suggesting a 200-point range between 10,700 and 10,900. In terms of some other changes, we have Balrampur Chini and Dewan Housing, which moves into the F&O ban. And we also have Jet Airways and, of course, Just Dial, which are also in the ban. And in terms of the put-call ratio, as you can see here, it's come off to a certain extent at around 1.55. That's on the Nifty. The Nifty Bank put-call ratio also coming off to around 0.95. So moving back below the mark of 1. In terms of some stocks, ICICI Prudential continues to show weakness. We see a surge of open interest yet again. So it continues to show that decline, of course, even as its parent considers paring stake in this particular company. And in terms of some other stocks, we have Aurobindo Pharma, which moved up as much as 4.2%. Open interest, very little change there, but there has been some amount of short covering, considering we've seen the strength in a lot of these pharma companies. And SRF, finally, we've seen that stock move up as much as 2.3%, and short covering seen there as well, considering so much volatility coming through for SRF. So these are some of the stocks that I'm going to watch out for, other than the benchmark indices, which for now are showing at least a subdued opening.
No, thanks a lot for that, Agam. We'll watch out for these and talk to our experts about these as well. But start off the show, or start off this segment, with a fundamental voice. T.S. Hariyar, founder and chief executive officer at HRBV Client Solutions, joins us right now on the show. Hari, good having you. Thanks so much for joining in. Yesterday was arguably one of the first days in many when IT as a pack showed a bit of a pullback. What a day to choose. 25 years of Infosys, and almost all of those came off. We have the TCS buyback slated for as well today. Yeah. What would your thoughts be on large cap IT currently?
See, I think we were neutral till about some time back, considering the kind of a rally. But I think if you read the fine print of the Fed data, I think one thing is very clear, that the US is now going to get back above the 3% GDP growth mark. Probably, not in this year, but probably 2019 is going to be 3.1 and about 3.4 in 2020. That is a kind of a guidance that the Fed has given. And if that happens, I think it is going to be accompanied by a lot of IT spending from US corporates. So I think for Indian IT, this is good news, and I think it is probably a reaction to that which we actually got to see yesterday. Of course, Infosys 25 years, I think, was probably one of the stories, but the essential, I think, story in favor of large caps appears to be the revival in IT spending in US, especially considering that the GDP is going to be higher now in the next 2 years.
Okay, interesting. What's the call on pharma? The stocks have done fabulously well. We're just doing the stats. 20-25% from the YTD lows is almost a given for the large cap pharma space. Are they kind of nearing a level from which there could be some technical pressures, if not fundamental?
Technical pressures, yes. I think apparently what has happened after the Sun Pharma Halol plant case, is that there seems to be a belief that the whole FDA thing may have been actually overblown. And I think that is what is probably showing. Now, see, if you look at stocks like Lupin, ultimately they continue to be good stocks. Probably there have been some lapses in their R&D, in their processes, but they continue to be solid stocks. And if you look at the price in the last 2 years, I think it's down about 70% or odd. So I think obviously, in my view, the worst is over. Technically, I agree. After 25% bounce, especially after almost, I would say 2 years of dryness, you have a 25% bounce. So some technical pressure likely, but I think fundamentally, probably we made the bottom on pharma.
Well, we'll have to wait and watch for that. But the Nifty Pharma Index definitely remains the top sectoral gainer for the week. It's up nearly 6% for the week. But let's talk about individual stocks. Vakrangi came out with its fourth quarter earnings last evening. While the numbers weren't anything to write home about, with EBITDA margins seeing a sharp drop, what's got everyone's focus is the change in stance as far as capital allocation strategy of the company is concerned. So what's changed there? Let's ask Darshan Mehta. According to him, what exactly the capital allocation policy they've changed the stance at, Darshan?
Yeah, so basically what happened was earlier on 12th of Feb, they came out with a press release indicating that they plan to change, they plan to have some changes in the capital allocation policy. There is when they announced a buyback and a dividend. So 1,000 crore buyback was something that happened. So this was what happened in Feb 12. So they said that they will use 1,000 crores for buyback, 250 crores for dividend, and 122 crores will be reinvested in business. Sorry, this is 250 crores, not 2,500 crores of dividend. So 1,250 crores was the total amount that they needed it. Now what they're saying is that, they haven't explicitly said that, they're cancelling the buyback. First, they're saying is that they have a plan now to increase their ATM, visibility. So they have 45,000 kendras, and they say that, we will install an ATM in each of these ATMs, and each ATM will cost, almost 2 lakh rupees. So that's almost 900 crores of capex that they have envisaged. So first they're saying is first they will increase the ATM share. They will actually first take a look at the 5,000 kendras out of the 45,000 kendras in which they will install this ATM. Post that, they will take some bit of views on the capital allocation policy. So there is a change of stance. They haven't completely said that they are scrapping it, but that gives an indication if they have 1,400 crores of cash on the book and 900 crores will be spent on ATMs, and they plan to increase their share of kendras from 45,000 to 75,000 by 2020. That means another 500 crores of capex will come in. So that entire money will be used there. So whether any money will come to shareholders by way of dividend or buyback is anyone's to guess. The new strategy that they've said is that they will upgrade all the 45,000 outlets. All of them will have an ATM, and the long-term target is 75,000 outlets by 2020, and even then all of them will have an ATM. Now the ramp up will happen in the ATM business, and capex has been used. 2 lakh rupees per ATM is something that they are saying, and they are saying more than 2 lakhs. So we are assuming a 2 lakh, but more than 2 lakhs will be allocated per ATM as per them, and they are taking no mandate for the legacy business. So what they're doing is focusing purely on the Kendra business. They have taken a one-time hit on the legacy business, a 220 crore one-time provision that they've taken, or a write-off they have taken, because they don't expect the money to come in from that project. So that is their new strategy, what they've planned out. Fourth quarter was extremely weak for Vakrangi this time around. If you're looking at it, one-time write-off in e-governance business, 220 crores was the amount that was there. 219.95, 290 crores was the amount that was factored in as far as the PNL is concerned. And finally, if you're looking at it, the good thing that they've done is that they've made the company debt free. They've repaid all the debt. Revenues were up 60%. They've considered that a one-time expense as part of the EBITDA, as part of operational expenses, and that comes in the EBITDA, and that is why it was a 64% drop that came in. Even profit, it trickled down to the profit. But nevertheless, I think more than the financials and this one-time write-off, I think investors will be more disappointed with the change in stance that the company has given in terms of their capital allocation policy.
Thanks a lot, Darshan, for bringing all those details. Hari, what is your view on this one? I remember when the buyback news came in the month of February, that was essentially to arrest the fall in the stock price. That did not happen. Do you think actions like these, suddenly you change your capital allocation policy, would attract some bit of attention from the regulator, SEBI, as well?
Not exactly, because in a way I would believe that what Vakrangi has done is correct, because the whole idea of a buyback is to essentially arrest the price fall, and I think they all learned from the lessons of PC Jewellers that just by announcing a buyback price you don't arrest the fall.
The whole idea of the buyback should be to reward shareholders because you have cash on your books, right?
No, see, the point is, I can understand when the stock is at a certain level, let's say 500, 600, it's a different thing. But when you're buying back 120, whatever is the current price, or 90, I don't know what is the current price, I think people can go in the market and buy. What are you going to do? Are you going to buy it 40 rupees higher, 30 rupees higher? See, Feb 12th and today is totally different. I think from Feb 12th till now it's down about 70%. So what is the point of going for a buyback? And I think, in my view, companies like Vakrangi don't need to do a buyback. Vakrangi is not a TCS. See, TCS has got billions of dollars on its books. It needs to use the cash. Vakrangi, in my view, should actually invest in expansion. I don't know why they came up with the idea of dividends. I don't know why they came up with the idea.
But this is misleading their shareholders, right? First you announce a buyback, then with your earnings, which have come out late actually, then they're saying, no, we're going to change our stance and look to invest that money into our business now.
They've actually mentioned some bad debts. Until now, they were always saying all government-related projects, there are no bad debts that we face because till the time the government of India keeps on paying, we're not incurring any of those. There are a lot of chinks in the armor right now.
What I understand is the bad debts you're talking about is the write-off they take on the e-governance business.
Yeah.
See, they are virtually winding up the e-governance business, so that is a write-off they've taken.
But why would you write off money that is coming?
They are like power dues. If they don't come, what do they do? They've got to write it off. See, that's a risk in government projects. And if you deal with government projects, you will know that there are some monies that just don't come. So you're going to take a hit and take a write-off. But see, I agree with you that there are two things they should have addressed. Number one, they should have addressed why the auditors left. I think that is something they have not addressed at all. Number two, they have to give a reason why they have been inconsistent. Why did they talk about a buyback in Feb and why did they not talk about a buyback? Now, I think they should have explained those two things. Having said that, I think strategically, if I was an investor, I would still prefer that Vakrangi, invest in expansion rather than doing a buyback. I want TCS to do a buyback. I don't want Vakrangi to do a buyback.
Okay. Are you? I mean, just this. Let's not talk about whether or not to invest in Vakrangi. It's a
risky
it's
call.
a pit full of snakes, so you don't really know which way it will turn out. So let's avoid that displeasure right now.
That's right, and we'll see if the stock how it opens today to its changing in stance of capital allocation today.
Yeah, let's wait and watch. But more than Vakrangi, there are a bunch of other stocks that we should be watching out for in trade today as well. So let's go across to our research desk to try and figure out what are the key names to watch out for aside of TCS, aside of Vakrangi, and maybe a few other names as well. Nikki, Shraddha, as well as Darshan join in to talk about all of those key stocks in news and the ones to watch out for. What is it, Shraddha, starting off with stocks in news?
Yes, just more of an update on ICICI Prudential that will remain in focus today as well. And that's because ICICI Bank has said that they will exercise that over-subscription option to sell another 1%. So overall, in line with that up to 2% stake sale approval that had come from the board. Two contract wins for Wipro. One is from Latam Cargo, one is from Nokia. Now, Tamil Nadu Newsprint has said that they will incur a capex of 2,520 crores on expanding various capacities. So watch out for that name. There seems to be some development on ICICI Bank. ET report says that former Supreme Court Judge B.N. Sri Krishna will conduct an investigation into the entire Chanda Kochar controversy. Remember, on 30th May, the board had ordered an independent inquiry, and that was after a whistleblower complaint. You also have a Mint report which is saying that ICICI Bank's nomination panel is readying a succession plan for the CEO. In fact, they've said that the committee may appoint a headhunting firm for shortlisting a new CEO, and the terms of an appointment have been discussed. So let's see how that one reacts. Also, GPT Infra projects on the back of a bulk deal where Ampersand Growth Opportunities Fund has sold 0.68% stake, and you have Saturn Credit Care Network where Goldman Sachs Singapore has bought 0.73% stake. The seller is DBS International. No big moves likely on many of these.
Yeah, well, so maybe not on some of the smaller ones, but could there be a big move on the big one, Darshan? Dr. Reddy.
Yeah, so basically what has happened is, the stock has already moved 16-17% on the anticipation of the launch of this drug, and we had written an article about it. So finally, the US FDA has approved that drug. Suboxone film has been approved. But remember, it's not only Dr. Reddy, Mylan has also gotten the approval, and it's an approval on an ongoing litigation. That means they will do an at-risk launch. Dr. Reddy Reddy has already come out with a press release indicating that, they plan to do an at-risk launch. So what will happen is that they will get the money, but in case they lose this case, the damages will be 3 times penalty what it is there. So that's a big risk that they are taking. Now, Indivior is the innovator for the drug. The brand value is $1.7 billion, and the market size is $800 million because of competition that's coming in. The brand size is $800 million. What are brokerages saying? Nomura is saying that, if there was no competition, if only the innovator is there and Dr. Reddy launches and Mylan doesn't launch, that would mean an EPS impact of EPS accretion of 62 rupees per share. But if Mylan also launches or any other competition comes in, that means it drops to almost 37 rupees. Investec is of the view that, since Dr. Reddy got the approval in all the 4, in all the 4 strengths, it's positive. But damages are something that they will have to incur if they lose this risk. As far as competition will probably come in now, because Teva also has approval. There are other companies which also have approval, and they are recommending selling out the counter, because the counter has already moved up 16-17% on the anticipation of this drug.
Oh, interesting. So whether or not at risk or otherwise, the stock has run up, and therefore maybe book profits.
Yeah, so it will definitely open gap up, because the development is positive. Whether it will stay or no is anyone's guess, because what we saw with Sun Pharma and Biocon also, that some of the time most of it is already factored in, so it cools. I don't want to take a guess on what will happen, but that's what Investec is saying. It's already run up 16% on the anticipation that this drug approval will come in. They will launch it at risk, so I think they feel it's factored in.
Okay, we'll ask Hari here about this as well, but before we do that, Nikki, CEAT, a stock in focus as well today.
Yeah, so annual investor conference was held yesterday, where the management reiterated the growth outlook and the capex plan. Now the company is undergoing a very significant capacity expansion plan, where it's planning to expand capacities in the truck and the car tire segment, along with the ramping up of capacity in the two-wheeler segment, where it has a good market share of 28 to 30%. What brokerages suggest on that, we have Deutsche Bank, which has maintained a buy rating on the counter, but has cut the target price from to 1,800 from rupees 1,950. It says that the capacity expansion will definitely lead to incremental market share, but at the same time, this will also increase the cost of the company at least by a good 3 to 4% sequentially from Q2 FY19. Along with that, it will also put some pressure in terms of its cash flow. It does prefer other two tire majors, that is Apollo Tires and MRF in this space. Macquarie on CEAT says that it has maintained the kind of rating and also the target price it has over the counter. It says that the management expects a revenue CAGR of 12 to 17% over the next 5 years. The capex is expected to peak by FY20, which is going to be funded through internal accrual means, and the EBITDA margin, importantly, is expected to improve over FY18 to FY21. They expect a 26 EPS CAGR in the next 3 years, FY18 to 21, led by 12% growth that we've seen in revenue.
Okay, watch out for this one as well. Thanks all of you for giving us those updates. Hari, I can ask you about multiple stocks, but Dr. Reddy's is the first one. Start off likely to be much higher than what the price was, or higher than what the price was yesterday. Can it sustain?
See, I think broadly the story would remain the same, be it Reddy, Lupin or Sun Pharma. I think at least the short-term bounce, as I see, would probably face the resistance. But I think, as I again said in the case of Lupin, the long-term story, I think, at least seems to have bottomed out. It may not get into a kind of a frenetic bull rally or anything, but definitely I think the worst at least seems to be over for Pharma.
Okay, let's wait and watch whether the worst seems to be over for pharma or not. But as per a report I was just reading, it said that earnings for the pharma companies for FY18 have fallen 30%. So let's see whether it's only about earnings contraction. But most of the analysts are also of the view that the multiples of these stocks, that has not contracted alongside earnings. So we'll wait and watch for that. But it's time for us to get in our technical experts. Shrikant Chauhan, Senior Vice President for Technical Research at Kotak Securities. And also joining us on the show is Raja Venkatraman, Chief Technical technical analyst at Chart Advice. Good morning to both of you, gentlemen. Let me come to you, Raja, first. Yesterday was not a great day for the markets. We did see some bit of, sell-off coming in the last two sessions, and at least in the last 5 sessions, if I observe, 2 days when we were actually approaching the 10,900 mark, we couldn't touch that mark, and there was some sell-off which was coming at higher levels. What is your reading on the charts now in Nifty?
Yeah, I agree with you on this point. If you recall, last week also I had said that we need a closing about 10,850.
Right.
And since April and May and once again in June, we are seeing that the 10,850 level is not being surpassed convincingly. And in this week, the interesting thing was the large caps. Reliance moved up, TCS moved to new high, Infi, all the heavyweights, and supporting them were the pharma space. But apart from that, there was not really much movement seen, and the market breadth has been largely neutral to negative. So the overall scenario is still continuing to be a little weakish, and I would continue to maintain a buy on dip and sell on rally approach. So that's why I continue to advocate a two-pronged strategy, like one buy and one sell. That's the best way to approach the market.
Okay, fine. We'll get to your individual stock ideas for the day, Raja. But before that, let me go across to Shrikant and take his view on the frontline indices today. Shrikant, would you take any trade today on Nifty or on Bank Nifty?
Good morning, everybody. Navneet, I think the overall formation of the Nifty is very clearly range bound, but it is finding a lot of resistance at higher levels. At the same time, 10,765 acted as a very good support in the past when the market was down. It was like failing to cross the level of 10,765. Yesterday also, when there was a weakness in the market, it was very close to those levels, and from there it recovered back. So today we are going to see that whether the market is holding this level or not. In case if we see the market is breaking to the levels of 10,765, then the next level to watch out for is between 10,700 720. So in that case, I would like to go short on the market. But if we see the market is holding above this level, then the chances of again hitting 10,830 835 would turn bright. And in that case, we'll take a stock specific view. If we see any higher opening close to 10,830 835, because nowadays SGX Nifty is not indicating or suggesting the right picture of the opening level for the market. So if we see the market is opening close to 10,830 850, then there certainly we should look for creating short positions on the market, because I'm not expecting market to cross even 10,900 so easily.
Okay. 8:50. Before we get into specific stocks, it's time for our special segment Bloomberg Edge, wherein Jayesh Khilnani tells us about a pattern that the Bloomberg terminal has thrown up on a stock. And Jayesh, what's the stock on the radar today?
Morning, Neeraj. It's Max Financial. That is because the stock is down 20% in the year so far and is now facing resistance at its 100-day moving average. And with yesterday's close, the fear and greed indicator has in fact given a sell signal. Let's have a look at the fear and greed indicator and what are the conditions that you have to keep in mind. It's a proprietary Bloomberg indicator which uses the spread of two weighted moving averages of true range as one of the key inputs for calculation, and it oscillates on a zero baseline, therefore becomes very easy to interpret. So you have to follow the color for your buy and sell signals. You buy when red turns into green, and you sell when green turns into red. And this is exactly what has happened on the chart of Max Financial. Let's have a look at the chart. You can see that there has been a steady decline in the year so far, and the bottom panel shows you the fear and greed indicator. If we zoom into this, there is a slight bit of red tick over here, which is the last one, which indicates that there could be a potential sell signal on the cards.
Interesting. And what about back testing, Jayesh?
So Neeraj, back testing for last 1 year shows that profit would have been about 30 to 32% if you had sold all the indications.
Wow. We'll wait and watch for this. Max Financial. Thanks a lot for that, Jayesh. Select financial names, insurance names under pressure, and we'll talk about them with Hari. But let's first get in some chart checks from our experts. And Shrikant, I'll come back to you first. What are the stocks that you're recommending today?
Neeraj, I would like to go with those stocks which are not part of index and they decide their own trend. We like VIP Industries, which close around 455, 457 levels. On daily basis, the stock closed into new territory. It is heading for at least 500 in next few days. But in the near term, I'm expecting 475. On the downside, 450, 451 is going to act as a very good support for it. So with the same stop loss of 450, if we create long positions, then I think that should do well for intraday traders. But if there is a medium-term view, then I am of the view that we should look for adding the stock to our portfolio because it is heading for at least 600 in next couple of months. The other stock which we like is Mahindra & Mahindra, and here the formation is quite interesting. It is forming symmetrical triangle on daily basis. The stock is continuously narrowing down its trading momentum, and in next 1 or 2 days of time, maybe today or tomorrow, Monday, we can see some activity in the stock on the upward side. So it's a buy at this price with a stop loss at 910, and we can expect a target of 945. But in next few days or few weeks, we can even see the levels of 1000 on Mahindra & Mahindra.
Okay, so those are two buy calls coming in from Shrikant. Raja, you mentioned you've got one buy and one sell for the day.
Yeah, so I would like to go in with the pharma space because that's bucking the trend. And from that, I pick out Walk Pharma because it's made a double bottom on the daily charts, and a valuation level around 710 has been surpassed quite successively, and you can expect a target of almost 10 to 15%. But then you can use it as an intraday play or as a positional play. So targets of around 830 to 840 is envisaged. So that's a good strong move because other pharmas have moved, and this setup is quite positive. And if the pharma space really moves with Dr. Reddy News also seeping in, that could definitely do well. And the other sell call, I'm again reiterating a sell on Adani Ports. Okay. A rally continues to remain a sell, and a move today below 375 would definitely augur more weakness, and it could see a drop towards around 360 to 355 levels.
Okay.
With this good trend line breakdown.
One buy, one sell coming in from Raja. Let's just talk about some individual stock. ICICI Prudential was weak in yesterday's session. If possible, if we could just pull up the June futures of the same. There was a major build-up seen in terms of open interest for ICICI Prudential. It's been trading in the negative territory for the last two sessions. Look at that, 92% higher, indicating that there are fresh short positions being taken. And remember, there was news that ICICI Bank is looking to sell nearly 2% stake in the company. Hari, what have you made of the news? Because ahead of that, we've seen some, shots being built up for both, not only for ICICI Prudential, but even ICICI Bank was weak yesterday.
See, I don't think it has got much to do with the sale, stake sale, because the kind of I would say image problems that ICICI is facing right now. If it sells a stake, I think it should be positive for Prudential rather than being negative. I think the bigger problem is that the market is expecting some compression in growth in the next 2 quarters on ICICI Prudential. In fact, the early numbers coming out from Prudential in the market are that the offtake of sales has not been too great. So next 2 quarters, I think the numbers are going to be in pressure. And I think this open interest build up as IC, the short interest, is more a response to the likely weak next 2 quarters rather than the sale of stake.
Interesting. There's also talk of this succession plan being drafted by the board for ICICI Bank individually. How does that augur? My broad question is, there could always be a 5, 10, 15% downside in a long-term stock, Hari. But are the valuations and the price correction in ICICI Bank indicative of almost all of the bad news in the price?
See, we really don't know what is the bad news. I think that's the problem.
Yeah, whatever is known right now.
Yeah, so whatever is known, I would believe probably another 10% lower, it should probably be, I think, a good stock. But I think there is something larger we need to understand. See, for a very long time, ICICI Bank has been what I call the driver of the entire private banking space, with the largest loan book, the aggressive growth. I think that it has lost to HDFC. Today HDFC Bank's loan book is about 25% larger than ICICI Bank's loan book. So I think when you lose leadership, you lose valuation. So I think that is what is probably going to weigh on ICICI. And if you look at it, probably Kotak is almost valued at, I think, as much as ICICI Bank or slightly more. I don't know what is the exact valuation. So I think the problem with ICICI Bank was it was always a bank that was known for its aggressive growth. And today when the bank is losing out on aggressive growth, whatever basic valuations that it had, I think also that's coming under question. So I don't know. I'm hoping 10% downside should be a good stock. But even a 10% downside, whether you should buy the stock or buy some other bank, I would not be too sure at this point.
So then what should you buy? Just recently looking at the commentary, somebody tweeted about it's a dated one, but the annual report of Kotak Bank and how Uday Kotak is saying that they will sustainably grow at 2 times the nominal GDP. Rashesh Shah in earnings interaction told us that all businesses will grow 3 to 5 times by 2025. Equitas is talking about a 30% CAGR for the next 5 years. If you had to bet on one financial name for the next 5 years, what would that name be?
See,
and why?
If I want to really be conservative, I would bet on HDFC Bank, because I still think that that is one banking stock. Come what may, at least in the next 5 years, I don't see any negative surprises. I don't see corporate governance issues, at least as of now, and I think that's a very, very important point as far as banks are concerned. So obviously, I would bet on HDFC Bank. If I was to look at a slightly higher risk, higher growth, I think IndusInd to me looks to be a very, very good bet, and probably IndusInd is what HDFC Bank was probably 15 years back. So I think from that perspective, if you ask me to bet on a growth stock, I would bet on IndusInd more than anything else.
Okay, so you're playing safe with both your options among the private banking space. One is HDFC and the other is IndusInd Bank. Pull up Dish TV. In a weak market like yesterday's, Dish TV managed to close in the positive territory. In fact, day before yesterday, we learned from the block deal data that Rare Enterprises had bought, I think, 0.7% stake in the company. Shrikant, let me come to you. A quick thought on the charts for Dish TV. Do you think at these levels, fresh long positions can be taken?
See, for Dish TV, the level of this 65, 60 around has played a very important role in last almost 2 years. And again, when there is a fall and stock is very close to those levels, we saw a good amount of volume, block trades, block deals. So it clearly shows that it is holding around these 60, 65 levels until the stock is not breaking the 60 as a mark. I think it is going to remain range bound, or again this stock can resume some rally, but we are not that bullish on the stock because overall performance is not that impressive. From here we are expecting again maximum somewhere close to 85 if we take a view of next 3 months. But otherwise my view is that it is better to focus more and more on Z or PVR, where there is a very clear cut formations. PVR especially is forming symmetrical triangle on monthly basis. So there I am expecting at least run up of 10 to 15% in next few days or weeks. So PVR looks really good. At this price, if there is a long-term view, then only one can look for adding Dish TV to their portfolio.
Okay, watch out for PVR and Inox Leisure as Race 3 also releases today. Let's see how that one performs. But just few seconds to go for the pre-opening rates to come on your screen. SGX Nifty has slipped further. Actually, it's down 28 points right now. Those are the initial pre-opening rates for you on the screen. It's showing a start above the mark of 10,800. But remember, these rates will settle down by 908. Let's just look at the individual stocks among the Nifty constituents. Infosys is down another 1.5% in the pre-opening session today. What's also in the negative territory is something like HUL, Hindalco, ONGC. All these stocks are suggesting a negative start, but on the upside, Dr. Reddy's, that's the stock which is going to be in focus after they've received an approval from US FDA for one of their drugs. 3.5% higher for that one. Let's see if it can sustain those gains. ICICI Bank is in focus. That too is suggesting a positive start. HDFC, Cipla, and you've also got your heavyweight like TCS. That's also trading in the green, at least in the pre-opening session, Neeraj.
Well, let's bring up something else as well. I want to see what Wakhangi is up to, really. It's that one stock that I really want to see whether it's reacting negatively or no. Oh, no, it's not. It's up about 5%. That's interesting. Maybe the market is taking it well. Yesterday, the belief, at least amongst the Twitterati, was that this isn't exactly what they were hoping for or thinking about. Let's wait and watch. Strange things do happen, or interesting things do happen. People can be mistaken. We've spoken about Dr. Reddy's. Bring up the rest of the pharma pack as well. Wockhardt was a recommendation by Raja. Let's bring that stock up as well, because pharma by and large seems to be in a very sweet spot for now. A couple of names starting off soft, but these are pre-open rates. Yeah, will change or can change. ACC is showing that unnatural 7% downtick. I think it'll correct itself. 1% placed under additional surveillance measures. Maybe that's the reason why the stock, after being in the green in trade yesterday, is starting off 5% lower. Let's wait and watch. Tata Elxsi had some very strong days. The last 2 or 3 is coming off today. And in today's session, I think JK Tires, amongst other companies, is doing rather okay in the first few minutes of the pre-open session. Let's wait and watch if these tend to correct. Last but not the least, a couple of stocks that really shot up in trade yesterday. Mahindra Logistics was up about 6.5% at all-time highs. Let's see if it's taking off from where it left off in the first few minutes of the pre-open session. So Mahindra Logistics would be the first one, and Sasken Technologies was the other one which hit fresh highs in trade yesterday. Let's see what Sasken is doing in the pre-open session. Not too much. We'll give these rates a chance to stabilize. Just want to mark, just want to mark the currency as well as the bond yields. 67.89, if I'm not wrong, 94. So almost back to 68 after that technical pullback that happened due to the perceived HDFC Bank demand by FIIs, or the currency demand for HDFC Bank purchased by FIIs. We lost almost 100 odd basis points out there on the rupee. So that is one. And two, the bond yields, let's see where they are trading at, 7.92. So after nudging that 8 mark, the bond yields have stayed largely stable.
You know, yesterday a lot of these emerging market currencies had seen a sharp fall. I think the Argentinian peso as well as Brazilian real, they were sharply down in trade. Probably that's the reaction that one can expect for the emerging market currencies going into trade today. But for the time being, let's get to the big brokerage calls for the day. And to take us through the same, Samit Sarkar joins us. Samit, over to you.
Good morning, Navneet. On the big brokerage calls for the day, first we have is Investec on RBL Bank. Now the brokerage has maintained its buy rating on the stock but have raised the target price to 660 from 630. Now according to the brokerage, the bank is rapidly scaling multiple partnerships, thereby creating a niche for itself in the credit card segment, and these partnerships will be a source of high profitability for the bank over a long-term period. Now, however, for the short term, that is for the next 4 to 6 quarters, the brokerage is expecting some drag on the operating leverage because of the dependencies on these partnerships. Now, the brokerage says that the visibility of improvement of return on asset is high over the next 2 years. Lastly, it is expecting a 10 basis points improvement in the return on asset every year and a 40% profit CAGR going forward. Second, we have is Deutsche Bank on UPL. Now, the brokerage has maintained its buy rating on the stock with a target price of 890. Now, according to the brokerage, the cross-currency movement of Brazilian real and US dollars is still in favor of UPL, and the stock correction in the last 1 month is overdone. Now, the brokerage is expecting the company to meet its constant currency revenue growth guidance on the back of favorable base in India and the Latin America business, and on the back of strong growth expected from the North America business. Now, it is also expecting the company to maintain its margins, to expand its margins going forward on the back of the backward integration plans of the company. Now, UPL's EPS is expected to grow at a compounded annual growth rate of 18% over FY18 to FY20, and the company still trades at a discount to its global and Indian peers, and this makes the stock a preferred stock in the Indian agri and space according to Citi and Deutsche Bank.
Okay, Samit, thanks a lot for bringing those big brokerage calls for the day. Just pull up Infibeam. Remember yesterday we did highlight towards the end it could enter into the F&O band, but that's not happened actually. And there was a unusual build-up seen for the farm month futures, that's the August futures of Infibeam, but a lot of shedding was seen for the June futures towards the end, and that's the reason why I didn't enter into the F&O band. So 154 for this one. But Raja, last week I remember there was a sharp correction seen for this counter of nearly 10%. How is it looking on the charts?
It's still looking weak, and it's developing into a flag breakdown on the technical parlance, and if it moves below the 143 levels, it could actually attract more selling pressure. So the movement also has not been, it's been iffy and not much participation has been seen. So overall the weakness continues to remain.
Okay. Interesting. You know, a couple of stocks, I mean, don't get perturbed by United Spirits. That's a technical adjustment out there as well. But I'm just looking at, so that's not really the stock I want to focus on. ITDC, after a 20% uptick in trade yesterday, is just cooling off a little bit. So after 3% down in the first few minutes of the pre-open session. And this is what typically would happen. The stocks go up because of a belief that divestment would bring in a lot of benefits to minority shareholders. Typically doesn't pan out exactly in the same fashion, so do watch out. By the way, the one that is really starting off well is Dr. Reddy's, up about 2.25%, so that's reacting all right to its news. Shrikant, for somebody who has a long in Dr. Reddy's, because 3 days ago or 2 days ago we put out this news on the website as well that the market is probably missing out on what is likely to be a launch, successful one from Dr. Reddy's, so maybe a few people went long. Would you stay long on Dr. Reddy's if you already are sitting on longs, or would you book some money out?
See, if there is a trading view, then certainly close to 2250 levels, so one can look for taking some profit on Dr. Reddy. But if there is a medium to long term view, and if like somebody, if someone have bought at higher levels, then our advice is that to hold on to the positions, because the broader outlook for pharma is turning positive on technicals. Volume as well as price patterns are clearly indicating us that almost all stocks have formed double bottom and they are reversing back. We were discussing on Lupin Laboratories a few minutes back. So definitely Lupin is going to outperform in this space. But Dr. Reddy as well as Sun Pharma, they are also going to give minimum 15 to 20% return in next few months. So if there is old positions or if there are any investments, just hold on to that. But for trading positions, I think 2250, 2270 is the next level to watch out for.
Okay. That's the view coming in on a couple of these pharma stocks. Hari, if you track Jubilant Industries in the last two sessions, I think on Wednesday it was locked in upper circuit. Yesterday there was some 18 to 19% gains. There's no news which is coming, at least on the stock exchange's website, but anything happening here?
Not that we could really track. But historically that stock has been quite volatile, so I'm not surprised by the moment. But frankly, I don't think we caught any specific news or anything about that stock.
Okay, Raja, anything on the charts you're spotting for Jubilant Industries?
It's actually given a good breakout on Wednesday, and since then the positive moves which are appearing are definitely indicating a move towards 850 levels.
Okay, let's see how that one opens today, whether once again there's an upper circuit or not for this one. But a lot of these infra stocks were active yesterday too. So something like Ramki Infra, that went up in trade. That was up nearly 10 to 11%. And overall also, once again, Hari, that affordable housing theme has, come into focus after the reject that's happened with regard to the Prime Minister Awas Yojana scheme. What have you made of it? And do you think we've seen the stocks rallying a lot post, I think, last year's budget. But do you see any groundwork happening on affordable housing?
I don't know, because what I realize is that the framework is there, but I don't think there is much that has actually happened, because what a lot of banks and financiers I speak to tell me is that it's a very, very difficult kind of market to finance. So they would still prefer, the second-rung cities or the top-rung cities. But low-cost housing, they say, is because first and foremost, credit assessment becomes difficult. Okay, number two, managing the credit, the cost is too high, so it's not possible to give it at the affordable rates that they want. So as a business model, people are still not too sure. So I think from the government side, the go-ahead is there. The problem is from the financier side. Ultimately, affordable housing has to be financed. And unless there is a proper business model, I don't think they're able to finance. But I think what the government is talking about, doing a strategic sale of certain companies, using the excess land for local, I'm not sure whether it is going to really work, because most of these factories and all are going to be in places where nobody would want to really live. But, I think as a concept, it is good. But as I said, the whole problem seems to be stuck at the finances end.
Okay. Maybe, well, I don't know if deep solutions lead to some just rewards for companies which are trying to do some good work here. Let's wait and watch. Anyways, less than 5 minutes left for the markets to kickstart. Let's tell you all that you need to know to stay ahead in trade today. Dr. Reddy's and Mylan get the US FDA nod for $1.7 billion addiction treatment drug. The street watches whether the companies will do an at-risk launch. Dr. Reddy's confirms it will do an at-risk launch.
E-commerce solutions provider Wakrangi to buy and upgrade 45,000 ATM cages, allocating 2 lakhs each for every ATM.
ICICI Bank mulls exercising oversubscription option to sell additional 1.43 crore shares in ICICI Prudential Life.
And Goldman Sachs buys 0.7% stake in Satin Credit Care Network, while DBS International sells.
In brokerage calls, Investec raises RBL Bank's price target to 660 rupees from 630 rupees per share, as the bank is creating a niche for itself in the credit card segment, according to Investec.
And Avenue Supermart says that it's unrealistic to expect same-store sales growth to continue at 20%, while adding that it plans to pass on the future benefits to its consumers.
And that stock starts off lower too, but hey, Wakrangi Software does start off 5% lower. Keep that at the back of your mind. Magma FinCorp, some interesting money has gone into it. The stock is down about 5% in trade today, 163. Raja, quick chart check here. Can you pull up Magma FinCorp?
Yeah, Magma FinCorp is actually trading into resistance around 182.
So 182, but currently at 153, right?
Yeah. So it has got room till 182, and there is some positive momentum seen. So one could actually look to play long towards 182.
So it's starting off 5% lower today. Would you buy into it?
Yeah. It's still a good buy opportunity.
You would buy into
because it's found a good support and it's actually heading higher.
Interesting. Okay.
Yeah.
Shrikant, a stock like Ujjivan Financial Services, which about 2-3 days ago was looking good to certain people at 406, 410, has come back to 390 odd. What would you do with an Ujjivan?
See, for Ujjivan, we have a bullish view, and we are of the view that if there is a positional view, then certainly one should look for adding this stock to the portfolio, because this stock has reduced its volatility completely, and it is holding well above the mark of 380, 385. Yesterday also, when there was a weakness in the market and market was down, it was around 390 levels, but from there again it recovered back. So for the day also, we are of the view that we should look for adding this stock to trading portfolio with a stop loss at close to 389, 387. And again, we can expect 410, 415 on the high side. But if we take a broader view, then Neeraj, I'm telling you, this stock is definitely going to do well. And we are expecting stock is heading for the levels of minimum 500, 530.
Okay. Hari, very short time. We'll take a detailed answer in a bit. But a quick answer first. Reliance Industries, 1006, near around those closing record highs. Would you buy into it?
See, I would still wait for it to sustain about 1,000 for some more days, because the good news was there in the last telecom numbers. I think it has crossed Idea. It is probably very close to crossing Vodafone. The good news is there in the telecom numbers, but I would still wait for the stock, because 1,000 has been traditionally a very, very big resistance for the stock. So I would wait for the stock to kind of sustain above 1,000 and break with volumes. I think that is when we would really buy Reliance.
Okay, very quickly, let's get the top trading call from our technical experts. Raja, one stock that you will bet on?
Walk Pharma.
Walk Pharma. Shrikant, what about you?
VIP Industries.
Okay, so both the trades, Walkart as well as VIP, our technical experts are suggesting on the buy side, Neeraj.
Thanks for that, Navneet. Well, you know, the basic indices are starting off extremely flat. I don't know if there would be a trade that our experts would have on any of these. So maybe I'll refrain from asking that. But maybe, Shrikant, a very quick 10-second view. Would you take a trade on the Nifty Bank at all?
See, for Bank Nifty, we are of the view that it is in a range, and 26,400, 450 is going to act as a very good support. Till then, it is not going to give any specific trend. So my view is that if there is any correction, then close to those levels, create long positions, contra positions of going long in Bank Nifty, close to 26,450.
Watch out for those levels, 26,450, and here's the start, 26,536. So it's a very flat start for almost all the key indices, including the Nifty Bank. Doubt that the mid caps and the small caps would be doing anything dramatically different. Pull up the broader end of the spectrum indices as well. Flattish start. Remember, they were very flat in trade yesterday as well. Slightly better than what the large caps did, of course, but very flat in trade yesterday as well. Bring up the heat map. It promises to be a dull start. We don't have too many stocks moving around, save for Dr. Reddy's. Let me start with the green for a change. Dr. Reddy is up about a couple of percentage points, so that's the only one on news. You could argue that ICICI Bank is a newsmaker, but hardly any move there, just about 1% or thereabouts. TCS on the day of the buyback is up about 1% after a 2% downtick in trade yesterday. And that aside, no, not too many. More red than green on the screen, but no alarm bells. Just that the red is slowly enveloping in a meaningful way. But again, if you look at the lower row, which is the top losers today, we don't have too many losers. L&T, about 1.5%. That's about it. But the rest of the names, well, hardly any moves. So no big gainers, no big losers. The stocks in news, Reddy's, TCS and ICICI Bank occupying the top draw and the gainers list. So, well, that's interesting. But the indices by themselves, extremely flat, no great movements, no knee-jerk reactions at all, none warranted, none expected either, but a very, very flat and a sedate start to almost all of the large cap names. I doubt that the mid caps and the small caps would be doing anything untoward as well. Save for Vakrangi, I just want to mark one stock before I hand it over to Navneet. Let's try and bring up Vakrangi software out here on the screen. Starts off 5% lower in trade. Navneet, what are you spotting?
You're only going to see 5% lower or 5% higher for for a stock like Vakrangi Neeraj. So that's the lower circuit. But a couple of stocks from the broader markets. I think you've got ITDC, which is up another 3% in today's session. Remember, the stock's been active so far this week. Kesoram Industries is also seeing an uptick of nearly 4% in trade. KRBL, that's up over 2%. And something like Eros International. Also, you've got Inox Leisure. Both of them are starting the day at least in the positive territory. Even RCF, that's seen some positive ticks in the opening session. On the losing side, Indiabulls Ventures, that's down nearly 5% in trade. Also remember, Manpasand Beverages, that's been placed under the additional surveillance measures by the exchanges. This news came in yesterday, so that's reacting negatively. And Quality once again is trading lower in trade. BPCL is down about 1% in trade. And DB Realty is also seeing some negative ticks. In terms of stocks and news, if you could just pull up Satin Credit Care Network, where Goldman Sachs Singapore PTE has acquired 0.7% stake in the company. So that's reacted positively to the news. And also something like GPT Infra Projects, where there was some fund buying and selling seen in yesterday's session. So GPT Infra, not too much of a positive tick there, trading only with gains of 0.5%. So can we just pull up the India Volatility Index as well, because the VIX has been correcting a lot in the last few sessions, and finally it is trading below the mark of 12.5, which is a positive sign at least for a lot of these derivatives analysts. So let's quickly get in the first thought on the opening rates. We're still hovering around the mark of 10,800. Shrikant, now tell me, are you going to take any position on the index or no?
Navneet, I think there is no point in taking any positions right now, because the market is in between. It is not breaking the level of 10,765, neither it is trading above the mark of 10,810. And if you see the overall formation, then today stocks which are down are like heavyweights like Larsen, Grasim, BPCL, IOC. These are all like pulling the market or keeping a lot of pressure on the market. So till the market is not sustaining well above the mark of 10,765, it is better to stay away. Be stock specific. There are like few stocks which are doing really well. We have to focus on those stocks.
Okay, very quickly, Raja, anything interesting popping on your screen after the opening rates?
Yeah, the buy in VAW Pharma continues to do well.
Okay.
And if you go for the index, I would say you could mark out the first half an hour range. And if it really breaks down below, which I feel it will, you could actually initiate a short, either on the Nifty or on the Bank Nifty.
Okay, that's a view coming in on the opening ticks. On that note, I would like to thank both our technical experts, Raja as well as Shrikant. Thanks a ton for joining us this morning, and have a great weekend.
Thank you.
Well, in terms of other stocks, pull up HOEC. I remember the stock going up in yesterday's session as well, and I think today's opening too has been on the positive side. Hari, if you track this one, it's up nearly 5%. I remember a year back there were some expansion plans going for HOEC.
No, I think the expansion plans are on.
Yeah.
That's on. I think what's probably working in favor of HOEC is that the company does work a lot on the exploration side. And, you know, the investments are finally coming back into oil exploration, with oil at about $70 to $80 a barrel. I think the investments seem to be coming back. So that's, I think, positive as far as the sentiments are concerned. It needs a little bit of support on the policy front. I think policy is where HOEC is probably, falling a little short. And if you look at most of the upstream oil companies, be it ONGC, be it oil, I think all of them are under some kind of pressure. But I think otherwise, if you look at it, the investments are increasing, and that is going to be positive as far as HOEC is concerned.
Okay, so we'll be watching out for that one. Thanks a lot, Hari, for joining us today and taking us through your views on individual stocks and also on a couple of sectors. Venky's India, that's also locked in upper circuit with gains of 5%. So keep an eye on that one too. And something like JBF Industries, this too has been quite active for the week. So JBF Industries also showing a tick of nearly 5% in trade. And Nifty is still hovering around that mark of 10,800. Let's move on and get our next guest on the show then. Rajat Jain, Chief Investment Officer at Principal Mutual Fund, joins us on the show now. Hi, Mr. Jain. Good morning to you, and thanks a lot for joining us today on Bloomberg Quint. First, a word on the macros, Mr. Jain. We've seen some emerging market currencies depreciating yesterday from the likes of from Argentina or Brazil. This morning too, we've seen some depreciation coming in for Indian rupee, and there are some headwinds revolving around higher crude oil prices. Also, inflationary pressures for India, they continue.
Truly. Oh, well, I think that's true, because I think Indian macros were very good last year if you look at through calendar 17. So clearly we are not as good, and there is some deterioration. and which ultimately certainly will result in higher current account deficit. If you saw the current account deficit for the last quarter of financial year 18, we came in about 1.9% of GDP, and likely will be something similar or slightly higher for FY19 for the full year probably. And clearly inflation, though I think inflation we have to see how it, for the full year, how it pans out. The core part of the inflation has been going up a bit. That's a bit of a concern. Fuel prices clearly have a bit of, are certainly going up, but also vegetable, fruit prices and core really, which I think is a concern. So overall, yes, macro is not looking so very great as what it was last calendar year. I think the market sort of pricing that in, or I wouldn't know. I mean, it certainly is aware of it, and that's one of the reasons the market has been a bit of up and down.
Mr. Jain, though the markets have been pretty volatile in the recent past, but overall, what's your reading being? Because we've seen support continuing from the domestic institutions at least.
Truly, I think yes. What we have seen is that the investors, the retail investors who have been coming into mutual funds, while there's been some damping of flows, but they still remain positive. I'll speak, say, for our fund house, and we're still seeing net positive inflows. So I think that remains. And we know the markets are okay. They may not be cheap, but they are not in bubble territory. So we are not seeing valuations where the markets are trading at say 24 or 25 times forward earnings. If you look at the market's valuations, market may be say 18 and a half times forward earnings. So it's not, I mean, it's at a premium to long-term valuation of say 16 and a half or 17 times, but we are not in bubble territory yet. And we are seeing the micro environment clearly, especially on the consumption theme, look better. There's a lot of expectation from the rural areas, particularly given the anticipation of a decent rainfall this year. And higher MSP prices, government work in terms of work on the road projects, which certainly does ultimately percolate down in terms of spending in the rural economy. So all of that sort of comes together. So we have fairly valued companies, decent growth on consumer. Though macro is a bit of a challenge, but fund flows still remain positive, I think, for the markets as a whole.
Mr. Jain, did you face redemption or slower inflows into balanced funds as well?
No, not really, actually.
Oh, okay.
I know one of the strengths that we have is that we have a very, very retail-oriented investor base, and we have not had those large redemptions from our balanced fund category.
Okay. Michael, just wanted to get that out of the way. Okay. Now, what to your mind is, what is your individual earnings expectations? The street is as divided as it can be between 15 to 16% to all the way to maybe 20 to 23%. What do you think we do in FY19 realistically? And what will drive that number? Would it be the performance of the corporate banks coming back to the fore which will lead to this?
Yeah, that will be, I think, okay, the first piece, our expectation of earning is between 17 to 20%. It's still a wide number because things are all over the place, but that's what we think is going to be. We are not in the camp which has a 23 or 24% sort of earnings growth. Because although economy is looking good in terms of the micro, at least it's looking good, but higher crude prices could potentially have an impact on the consumer. If you look at the petrol sales for the last month, for example, they were, I think, down about 1 to 1.5% year on year. So probably, I mean, so higher petrol prices is going to have crude prices could potentially have an impact on the consumer demand. So overall, we still think the growth will be substantial, but should be between 17 to 20%, partly because of the base effect, as you've just said, in the case of the corporate banks, because the earnings virtually, I mean, we had losses for the banks as a whole, as a category. And so that's certainly going to be one of the things that's going to drive. Other than that, we like autos and the consumer discretionary space. So autos, auto ancillaries, I think they should do fair amount of earnings growth there as well. And software probably grows of the order of say 10, 11, 12% sort of growth likely from there. But substantially, yes, a base effect is going to drive, especially in the corporate banks, is going to have some impact on the earnings growth for next year.
You would believe that the markets will be able to do away with the ex-banking earnings looking robust line this time around?
I'm sorry, Neeraj, I missed that.
No, so quarter 3 and quarter 4, most people were trying to justify their earnings estimates saying that the earnings are good, ex-banks. Do you think FY19 we won't have the need to use those terms?
Yes. I would think so.
Okay.
I would think so. We would not probably. I think what we are seeing, if you look at the banking sector, most of the recognition seems to be behind us. However, one area I think that people have been talking about certainly is power. So on private generation companies particularly. So that's one area which can still create issues. But outside of that, incrementally we don't see negative surprises in the asset quality, and there could be some positive write-backs as we see the NCLT cases getting resolved. Certainly the first list of 12 actually should see positive write-backs there. So yes, I think the street would need not talk about ex-banks. You're right.
Well, certainly hope so. Okay, you gave us a brief of the other two spaces where you believe the earnings growth will come about, which is autos and IT. Now, calendar year 18 thus far has been mixed for the auto stocks performance, in part maybe also because of the kind of gains that 2017 showed. But the Ashok Leylands, the Marutis of the world haven't really been able to put on some good shows. It's been restricted to select auto components, maybe companies like Mahindra and Mahindra at best, which have shown the metal or shown the returns for shareholders. What happens in FY19 or say over the next 12 months? Do the usual set of winners come back because the monthly numbers and the earnings will still show?
Yeah, I think I'll just make a broader point and then come to these. I think the broader point itself is for the markets, the broad markets as a whole, while they are slightly expensive, they are not in bubble territory, as I've said. However, the weakening macros, the aggressive news flow in terms of the global news flow in terms of talks on trade, in terms of Indian political situation, in terms of having an elections later this year and the general elections early next year. So all of these will weigh on the market. So our call on the market itself is moderate returns this year. I mean, probably high single digit. Though we don't take a call on that, but expect that to be the case. Within that environment now, it will be unfair to expect, a certain subsegment of the market to do substantially better. So our call on autos is a fundamental call. I won't know if they will do very well in the current calendar year. Partly you're right because of the fact that they have done so very well in the past. I mean, like Maruti or Ashok Leyland have done very well in the past. But the demand looks robust. The valuations are not cheap, but they're not totally out of whack. So, and I think incrementally are things getting better or worse? I mean, that's the end thing you look for. So still we think that the consumer demand is holding up. So overall, we think auto ancillaries certainly should do well. But I wouldn't have a call if they would do well in the next 9 to 12 months, say going into March 2019. But over the next probably 1.5 to 2 years, we think auto certainly would be a space which does well.
Mr. Jain, one sector which everyone's been talking about, at least in the last 1 week to 10 days, we've seen some consistent gains coming in from a lot of these pharma stocks, which were beaten down in the last 2 to 3 years because of pricing pressure. Do you think the sector has now bottomed out? Is the move that we've seen in the last 1 week or 10 days, is it convincing?
See, if you look at as to what had happened to these pharma companies, biggest obviously was more than, I mean, FDA in terms of quality issues at respective plants. The concern was of the especially US authorities pushing for generics, pushing for lower prices, plus I think the FDA action in terms of quality. I think that seems to be, and Indian companies actually are well-run companies. Indian pharma companies are quite well-run. We clearly needed to improve, we needed to pull ourselves up, improve our systems, which I think the larger companies seem to be getting behind them. We seem to look at the commentaries come the last week. I mean, companies have specifically said that these locations, these plant locations are out of regulatory action. So we have put our things in place. So yes, that is, so I mean, we always had a well-run pharma space. I mean, we are competitive globally. We have, good chemists, we have good synthesis skills. So all of that, I mean, we have good legal skills, all of that. We had the building blocks in place, but we had the environment which was, plus our own shortcomings in terms of the quality issues, we seem to have gotten that over with. So yes, it was, I mean, the pace of the move was because they were beaten down. A lot of correction did happen. But having said that, I think pharma still has, I think we should do reasonably well over the next 2 to 3 years.
Mr. Jain, what the street would also like to know, are you seeing any sort of fund allocation now going to this sector?
To the pharma space, you mean?
Yes.
Yes, I think because while a lot of people had neutral weight, I think a substantial people were underweight pharma space, so there could be some reallocation there.
Interesting. What is it that you are bearish on? You've spoken about pockets where you believe the strength will come in, the 2 or 3, even the limited strength. What is it that you are shunning completely?
It's not, say, okay, if you look at the financial space, we are not bearish financials. I mean, financials is the largest part of our portfolio, but the benchmark weight is, say, 30, 31%. We could be around 23, 24, 25%. And I think, like most, so what we have is that look at divided into 3 components: the PSU banks, the private banks, and then the NBFCs. Within the PSU banks, so we have the large PSU banks. The private sector banks, yes, we have the corporate banks. And then the NBFCs, however, we've been slightly more selective. There are NBFCs and there are NBFCs. So it's a very, very wide space, but especially given higher cost of borrowing, given premium valuations, while demand still holds good, but premium valuation and increasing competition. And a lot of people have raised capital. Competition is there. Cost of money is getting more expensive. So we have been selective in picking NBFCs into our portfolio. It's not that we don't have NBFCs, but we do have some medium-sized NBFCs which are experts in their own niche segments. Either they are doing the mid-sized corporates or agricultural, that facing segment, or they have their own niches. So, but generally, as a space, we were slightly more cautious NBFCs in our portfolio.
Okay, Mr. Jain, we'll leave it at that. Many thanks for joining in today and giving us that perspective. Good having you. Look forward to having you more often on this forum.
Thanks, pleasure. My pleasure.
Right. That's, of course, the view from Rajat Jain. The markets flat as flat can be. The mid caps and the small caps too haven't really done too much in trade. It's a very, very tepid Friday, if I can use that term, but not tepid for Vakrangi, or maybe more tepid for Vakrangi, because it's hit a lower circuit after the company announced a change in the capital allocation strategy last evening. Shareholders will not be rewarded with a buyback or a dividend as earlier planned. Darshan is standing by to explain exactly what has changed from the last time around. Darshan.
Yeah, so basically on 12th of February, they came out with a capital allocation policy. They said that they will consider this, and they said they will consider it. They didn't commit to it. That's what I wanted to say. 1,000 crore buyback for, what they want to use their cash. They had almost 1,475 crores. So what they said is that they will consider 1,000 crore buyback, 250 crores for dividends, and 122 crores to reinvest in the business. Now, what happened post the numbers that came in yesterday? They've changed the capital allocation plan. What they've said is first they look to increase the ATM count, and so what their main plan and strategy was that they want to increase ATM. So each ATM cost over 2 lakh rupees. In their 45,000 50,000 Kendras, they want to install these ATMs. So that's a cost of almost 900 crores. And they say that first the share buyback or the dividend option will be considered only after the first 5,000 new outlets are operational, when they test this thing. So they're saying that they are putting this on the back burner. They haven't put it in black and white that, you know, they want to shelve this plan, but indirectly they're saying that, you know, first we will look at, you know, raising the business or you know, capex or the ATM, then we will consider this. So that's what happened, and that's what got the investors disappointed. Now, what is the new strategy of Vakrangee? Firstly, they are saying that they will upgrade all the 45,000 outlets that they have with this ATM. Now, long-term target is 75,000 ATMs for till 2020. That would mean that, you know, another 30,000 ATMs that will come in. So ATM business capex will be ramped up. Each Kendra will have an ATM, and that cost is almost 2 lakh rupees per ATM. That means a capex of 900 crores on the existing 45,000 centers, and by 2020 another 500 crores, given the fact that, you know, they'll have another some 30,000 new Kendras that will come in out. So they're taking no new mandates for the legacy business, and they want to focus only on the Vakrangee Kendra. What has happened in the financial this time around is that they've taken a big one-off that is there, and that has impacted the financial. So fourth quarter, there was a one-time write-off in e-governance business, which they want to exit now completely. It was a 220 crore loss that was factored in as far as other expenses in the P&L, and that is why their EBITDA took a big hit coming around. So if you're looking at even though revenues grow 61% on a YOY basis, the EBITDA was down 64%, factoring in a 220 crore one-time expense here, and that has also been factored in the profit this time around. But more than the financials, I think it's a change of the management, in which, you know, first they had indicated that they will consider a buyback and a share dividend. Now they've changed their stance, and they're saying we'll grow the business first and then consider it. So there's no much more clarity coming in what the company management wants to do, and that is why, you know, the stock is down in trade today.
Thanks for that, Darshan. Well, that's Vakrangee for you. Let's slip into a break now. On the other side of the break, we discuss growth prospects for Cyient with President and Chief Financial Officer Ajay Agarwal. Stay tuned.